A modified endowment contract is a life insurance policy and, like other life insurance policies, provides favorable tax treatment of death benefits and tax-deferred growth of cash value. However, a MEC is subject to less favorable taxation on distributions of cash value, including withdrawals, policy loans, and certain other deemed distributions. Welcome, my name is McCluskey. I help families with their finances, and today we're going to continue this conversation about modified endowment contracts. In general, a life insurance policy that is being overfunded for cash value is in danger of becoming a modified endowment contract when it does not comply with the 7-pay test. For example, if you were moving over $1 million, that is your guideline single premium, and you had a 7-pay test that is $200,000, that means that's how much you can put in a year until you get to $1 million. So in this case, putting in $200,000 each year for 5 years until you have $1 million. If you do not comply with that, so if you just moved the $1 million in all on day one or in the first year, you're not complying with that $200,000 limit that you had with the 7-pay test, hence you are creating a modified endowment contract. As stated in the beginning, this would mean the taxation on future withdrawals and policy loans would not be as favorable. You're not going to be able to get that tax-free access. Now, a MEC can be favorable in one specific scenario. This is when you aren't concerned about the living benefits or the tax-free access, but you're much more concerned about transferring this money to heirs. On the other hand, when the person overfunding the policy is excited about actually being able to access that money tax-free while they're alive, which is most of the time, this is a case where you want to avoid the modified endowment contract. It is important to note, however, if you are wanting to do it for that wealth transfer, it can be very beneficial to you to fund the policy right away. Why? Because the faster you get the money into the policy, the faster it is going to grow. Lastly, if a MEC was mistakenly created, like in the example with $1 million and the $200,000 7-pay test, so if you funded the policy with $400,000 in year one and you didn't mean to do that, you have up until 60 days after the policy anniversary date to call in, let them know that that was a mistake, and get that fixed. After that, the policy is a MEC forever. Hopefully this was helpful. If you learned something about modified endowment contracts that you didn't know before, I do ask that you subscribe. I release videos 5 days a week going into the nuances of strategies with life insurance. I look forward to seeing you in a future video. Bye-bye.